Hello and welcome to another update on the Dow Jones. Yeah, since the last update, the Dow Jones has shown a bit of a pullback. We have seen a break below the last swing low, and the move down could be interpreted potentially as a micro 5-wave decline. So if you watched the last update, then you are aware, or you were aware, that the move to the upside is seen as a 3-wave rally, a 3-wave corrective rally from the April low, which could be a wave 4 in the bullish wave count, in the bullish case. But it could also just be the A wave of a much larger correction, which could actually send us into a much, much larger bear market. We discussed that in the last update. For now, we don't know which one it is. I am leaning towards the yellow scenario, which is the bullish scenario, but really both are possible interpretations. It will be revealed probably over the coming weeks due to the structure of the decline. So in this correction, again, which we can label an ABC structure, the support zone is between $40,276 and $37,853. And the structure of the Dow Jones, and as you know, that the Dow Jones is a very, very meaningful stock index, the structure of this pullback will tell us a lot about the US stock market. If it's a corrective pullback, I'm going to watch for higher prices. Again, that is at the moment my leaning. But also, I don't have a crystal ball, so it's about really staying close to the microstructures, and it's about being flexible as this decline unfolds. If the move down is impulsive and we break below 37,853, then it does open the door to a much, much larger correction. One more high, while it is marked with a question mark here at the moment, it is still the interpretation. But overall, looking at the bigger picture, which we talked about in previous updates, looking at the big picture, the overall rally actually can be classed technically as complete. I think, though, that it looks better with one more high. But because the move up can be classed as complete, we need to understand the risk, okay? I mean, we are completing a 5-wave rally from the 2009 low. So it could be really a massive correction. Actually, a 5-wave rally, well, I don't even have the whole chart labeled, I believe. Oh, I do. 5-wave rally from the 1932 low. So that is quite substantial. I just wanted to highlight the meaning of this top that might be forming here. And honestly, from the perspective of the weekly or the monthly chart, whether we get another high or not, is really just noise. It's really just noise. So I think the focus is on whether now this last swing high can hold. I would say due to the potential 5-wave decline we've seen here, pressure is down at the moment. What we can do is to add resistance to the chart, because if this is really the beginning of a larger correction, whether it's the yellow B wave or a much larger correction, the market should stay below the 78.6 retracement. So that also means that breaking above the 78.6 retracement would be an indication for us that the bulls might make a comeback. And that level is at 42,526. So these are the parameters to watch for. At the moment, next support levels, I mean, we broke below this previous swing lows. I'm just highlighting here some structural support levels that might be meaningful here. 41,130. And then the 40,770 level. These would be the next structural support levels. That's the update about the Dow Jones. Thanks so much. Bye-bye.